Welcome to the latest Motley Fool scoreboard. I'm on in Chockable, and we've got longtime fools Toby Bordelon and Matt Frankel giving a 1 to 10 rating to a top 200 stock in the primary hidden gems database. It's TOST, ticker symbol TOST. Rate the strength of TOST business first, including factors like industry and competition. 10 is invincible. A 1 is hopeless. Both of you have 8s, Matt.
Yeah, I mean, there are widespread fears right now that AI is going to disrupt software businesses like this, which is why Toast stock hasn't performed that well. But this is a powerful ecosystem that is essential to its customers' businesses. I used to run restaurants. I used to pay 20 different vendors to do what Toast does. And things that we couldn't even do back then, like mobile apps. These are things that restaurants used to pay a lot of vendors for, creating mobile apps, setting up delivery, handling payroll, scheduling, ordering. The list goes on and on. There is some competition, but Toast's growth momentum just shows how valuable this platform is.
Yeah, 8 for me too. They've had very impressive growth since launch here. This is a clear innovator and I'd say a first mover, arguably, in their space, given everything they're doing there. Quickly growing to dominate the restaurant, payments, and technology space here. They added 30,000 net new locations next year, which is quite impressive. ARR across the 2 billion mark. So you can see that growth there, that's just moving right along. Plenty of potential ahead too, especially as they move internationally into some non-restaurant adjacent spaces as they're doing now. Biggest issue is competition, of course. It's big here, and they're not going to be able to take anything for granted as they keep on going.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Once again, both of you have 8s, Matt.
Yeah, no complaints here. I'm probably going to say the name wrong. Aman Narang has nearly doubled the company's revenue since he took over in a pretty short amount of time. I think it was just 3 or 4 years ago. Toby mentioned the non-restaurant things they're doing. They just announced a partnership with Instacart, for example. They're opportunistically focusing on share buybacks, which I'm thrilled to see a software business taking advantage of a valuation dip. So that's really nice to see.
Yeah, CEO's been impressive. He's only led the company since 2023, but the results have been exceptional since he took over. All right, so that's really great to see. Good vision with the product, leaning into AI, heavily investing as needed. So everything you want to see someone doing at this stage in the company's life cycle.
For financials, a 10 is a fortress, a 1 is yikes, and 8s sweep the fundamentals, Matt.
Yeah, I promise we didn't just give 8s throughout this whole thing. We'll get to some non-8s in a little bit. But Toast has $2 billion in cash on the balance sheet. They just added another $500 million to their, they call it the opportunistic buyback. 24% revenue growth last year. It's even stronger growth in gross profit, so that shows their margins are expanding. The business is getting more efficient as it scales. It's only been net profitable for about a year, which is why I couldn't go higher than an 8. But its margins should increase nicely over the next few years.
Yeah, I mean, look, we give 8s and above when they're deserved, right? And I think they're deserved here. Growth is nice. Net income's exploded in the past year. Margins look really good. The balance sheet is great. I just don't have any financial concerns with this business at the moment.
Toby, let's talk valuation then. How well will Toast stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
Here's where it gets maybe a little lower. I'd say returns 10 to 15%. It's a fast grower for the next couple of years, I think. It's going to continue to do that. Now, safety, I go with 6. There's just too much competition for me to go higher than that. And tying yourself to the restaurant industry as they've done, that's been great for them. That's what they do, but it carries some risk, right? As Matt, I'm sure knows, customers in this industry tend to go out of business quite a bit. That's just a thing with restaurants. And a downturn could mean bad times all across the industry with fewer opportunities to sign up new business, perhaps. So there are some risks with that.
Yeah, I said 10 to 15%. I gave it a 7 for safety. Toby's absolutely right. And one of the statistics that I'm often been quoting, just from my days in the restaurant business, roughly 50% of new restaurants fail within the first year. The stock is especially attractive right now. It trades at 20 times management's adjusted EBITDA guidance for 2026, and it's growing at over a 20% rate. So that's a pretty attractive valuation, in my opinion. But like Toby said, the biggest risk factor is the food service industry. Not only restaurants going out of business, it's just highly cyclical. And Toast depends on the willingness and ability of restaurant owners to spend money to upgrade their systems.
Thank you to both Matt and to Toby. They've given Toast a strong overall score of 7.6 out of 10 with no top hits. Look out for a new scoreboard every market day, at 7 p.m. Eastern. Next up is Burns Worldwide. Till then, Fool on. You know, I'd expect your office to be a lot cleaner, Matt.
That's fair.